Hey guys. Hope you had a great weekend. NASDAQ closed up 1.29% last week. It is less than 5% off its previous all-time high. What will happen to NASDAQ in the next 2 weeks? Do we make new highs or do we get rejected and go down lower? That's what we will be looking at today. We will also briefly look at gold and 10-year yields and a quick look at 2 stocks that we think are interesting. Finally, we look at some hedges and the best areas to hedge. So please stay and enjoy the analysis. NASDAQ. If we look at the weekly chart of the NASDAQ, price went up and touched the weekly FVG and quickly got rejected on Friday. We have now developed another FVG just below. This will be the area that will provide long opportunities for NASDAQ. The price is above all the moving averages and the moving averages are going up. So a bullish bias should be maintained. The most important determinant as to what will happen to NASDAQ in the next 2 weeks would be the NVIDIA earnings on Wednesday, August 28th. The top FVG is the last line of defense for the bears. If the price manages to go above the FVG and close on a daily basis, then we can be sure that NASDAQ will make new all-time highs. If, however, we are unable to overcome the FVG, then very likely we will have a retracement before any move higher. If we do have a retracement, how low can we go? If we look at the daily chart of the NASDAQ, we have 2 FVG within the weekly FVG. Ideally, as outlined in last week's analysis, we do not want the price to go below the top FVG. This would be very bullish. The lower FVG would be the last line of defense for the bulls. So in summary, we should maintain a bullish bias and look for long setups in the daily FVG. The one thing that concerns us about the bullish bias is the relative weakness of the NASDAQ. If we compare NASDAQ, the Dow Jones, and the S&P 500, we can see both the Dow Jones and S&P 500 very near the all-time highs, but the NASDAQ is not. If NASDAQ does not make a higher high, while both the Dow and the S&P 500 make new all-time highs, we will have index divergence, which is a warning sign of the topping of the indices. Remember, we always have increased volatility and pullbacks before the November elections. So we are on the lookout for index divergence to warn us of potential topping of the indices. Before we move on, let's quickly take a look at the NVIDIA chart. Price is showing relative strength compared to the NASDAQ and price is very close to the all-time high. If the price can close above $136 on a daily basis after release of earnings, then it is very bullish both for NVIDIA and NASDAQ. 10-year yields. The price has been consolidating after a big move down. We think that it will continue to move down in the coming weeks. We need lower prices in oil for this. If we compare the 10-year yields with the crude oil prices, you can see clearly there is a good correlation of the yields with crude oil prices. There is potential for crude oil to fall to $62 provided there is no escalation in geopolitical tensions. In our view, crude oil is trading at a premium price compared to the underlying supply-demand fundamentals due to geopolitical tensions. There is clearly softening of the demand, and that is why crude is showing weakness even in the face of OPEC oil cuts. Gold. Gold closed higher by a tiny bit. As per our previous forecast, there is potential for gold to go up to $2,620. This would be a 2 standard deviation move from the last stop run. We think that it is very unlikely that gold will move beyond this for this year. If we do get there fairly quickly, then we will be looking to close out our long positions in some of the gold stocks. Every week we want to highlight 2 stocks which can potentially outperform in the coming weeks. The first one is Roche Holdings. This is a Swiss biotech company. They acquired Genentech in 2009. Their market cap is $220 billion with a relatively low PE ratio of 21 compared to US-listed biotech majors. They also have relatively low debt at $20 billion. The price has shot up in the last 2 months, breaking the downtrend that was in place before. As you can see, the 20-week EMA has crossed the 50-week EMA, which is a bullish technical sign. From a technical standpoint, the price is consolidating and potentially break out to go up to $360. What we like about Roche is that they have had positive results for their oral GLP receptor drugs for weight loss recently. This could be a blockbuster drug for Roche. They are also in a very good position to buy out other smaller promising biotech companies. One company that they might buy out would be Viking Therapeutics, which also has phase 3 trials of oral GLP drugs. The GLP drugs have been blockbuster drugs for Eli Lilly and Novo Nordisk, who have seen their share prices shoot up to the moon. If they can bring one of these drugs into the market, then we have potential to go all the way to all-time highs at $440. If we compare Roche with S&P 500 and Bristol Myers Squibb, we can see Roche clearly outperforming the other 2. We think that Roche would be a clear winner in the coming biotech boom this decade. The second one we want to highlight is in the home builders sector. Again, we have covered this stock in the past. This is a small cap stock called Dreamfinders Homes. They focus their house building activities in the Sunbelt areas, which are seeing increased intrastate migration in the USA. Their share price has more than tripled in the last 3 years. They have recently seen some share price falls, but the uptrend is still intact. Its market cap is $3.15 billion and the PE ratio is 11. The price can potentially test all-time highs provided the interest rates continue to fall as expected. This stock will be very sensitive to the interest rates and so will underperform if interest rates do not fall as expected. Lastly, we want to quickly present some ideas on some hedges. Why do we need hedges now? Well, September and October are historically bad for stocks, and also we have the US elections in November, which will add to another dimension of uncertainty to the stock market. Yes, we are expecting a September cut in interest rates, but this is likely to be priced in, and the stock market can potentially sell off in a buy the rumor, sell the news kind of scenario. So in our view, it is good to have some hedges to protect the portfolio. If we look at the NASDAQ chart, the weekly FVG would be best place to put the hedges on. There are 2 ways to do the hedges. One is to use options and the other one is to use QQQ. If we use the QQQ, then we take the hedges in the weekly FVG and close or trim the hedges if NASDAQ goes above the FVG. Options are a better form of hedging. Please see our previous video on how to hedge a portfolio for this. Here we explain in detail on how to hedge a portfolio on a nearly cost-neutral basis. And that's it for this episode from Muffet Investments. If you think that we have provided value, please like and share the video to help the channel.